Hi, I'm Alex, welcome to the channel and thanks for tuning in. Now in today's video we're talking about HITI again. Now there have been a number of developments in the past week and we're going to talk about all of these. Again, I've seen some slightly misleading stuff online about this, so I'm keen to in this video put that all to bed. Now this week we've seen the appointment of a new COO, new store openings, stock issuances, stock manipulation claims, and also in this video we'll touch on the Smoke Cartel deal and some other parts as well. If you're interested in HITI, this is one you want to stick around for. In this video, I'm asking you for a favour again. In my last video, I asked you to hit the like button in the battle against needing to make thumbnails and titles clickbaity to get the algorithm to push videos. This is something I never want to do with the channel. The response I had from you guys was amazing, and is actually up there with our best like to view ratio ever, so thank you so much for that. Can I please ask you to keep this up, so the algorithm knows that we don't need this clickbait content within the finance and investing YouTube space, as ultimately it's detrimental in the long run. If you're new to the channel and you like investor related content, then hit the subscribe button. If you're interested in more content, private video chats, private Discord, and other things as well, then check out the Patreon page. As always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So firstly, let's talk about the hiring of the new COO, Aman Sood. Now, you may recognise that name. He's actually been promoted to the title of COO, Chief Operating Officer. He's actually been at HITI since the acquisition of Meta, where he was the CEO previously. And since the acquisition, he's been holding the role of Senior Director, IT, Retail and Operations. But this recent development this week has seen him promoted to Chief Operating Officer. Now, by all accounts, he's a really good guy. He has great retail sector pedigree, over 20 years of relevant experience, and he really knows what he's doing. Personally, I see this as great news. He can now be held accountable for the operational side of the business, and my expectation and personal belief is that I think we may see Raj, the CEO, take more of an active role in the M&A and delivering that part of the strategy. However, any way you look at this, it's great news. Now, the second topic here which we need to discuss is the granting of various equity instruments to a number of people connected with HITI. Now, this is where I have seen some misinformation about this spread around online, so as part of this I'm hoping to dispel that. So after hours on Wednesday, the company announced that there would be a number of equity instruments awarded to certain professionals related with the company. Now before we go into this in more detail, we need to understand the difference between a stock option and a restricted stock unit, an RSU. In this case, both have been issued, but they both have slightly different implications for both the recipient and for the company. So firstly, stock options are exactly that. They are options for a stock which are issued by a company, giving the recipient of that option the option to buy that stock at a certain price. That price is often referred to as the strike price, and they typically have a vesting period associated with them too when they're given in this way. This is a period of time after which the option can be exercised and the stock bought. With stock options, proceeds are raised by the company through the options being exercised, and so the company generates a cash inflow from that. A restricted stock unit, or an RSU, is a unit of stock in a company which has been gifted by the company. The recipient of that pays nothing for it, and the company does not make any cash inflows or does not raise capital from that. Similarly to stock options though, RSUs do have a vesting period, so they can only be converted into a stock after a specific period of time. So with this in mind, it's important to understand who the recipients of these are, and we'll come on to what this means for us as investors. Now, in the filing on Wednesday, it announced that options had been granted to Raj, the CEO, Rahim, the CFO, and Andy, the CRO, or Chief Revenue Officer. All of these are members of the executive management team, and typically such options like this form part of their standard remuneration package or their compensation. For the key members of the executive management team, they're a great tool in ensuring long-term incentivization and an alignment of interests with investors. It's also worth adding here that options have been granted to Aman, the new COO who's been recently promoted, and that was announced in the more recent filing. In total, these options account for around 4.5 million shares, or 5.1 if you include those also granted to Aman. Now, firstly, this is not massively dilutive at all, and secondly, it shouldn't come as a surprise, as the company clearly has stated that this is part of their strategy for executive remuneration going forward. As I've mentioned already, for executive management, stock options form a key part of their compensation package, and in fact it's pretty essential in ensuring the management incentivization in the long term, ensuring they drive sustainable stock price increases. It also ensures that key members of the team are locked in, and those who are needed for the delivery of the strategy don't leave to another company or a competitor. Ultimately, if they do, they lose a large value of their personal wealth that they have in these unvested stock options. Now, coming on to the RSUs, they've been issued to Christian Sinclair, who's on the board of HITI. He has been granted 200,000 RSUs. Now, his role in the company is on the board and it's supporting key strategic initiatives and providing oversight. He's very highly regarded. He's listed in Canada's top 40 under 40 and has really good expertise in the cannabis space. What's more, the RSUs he hold is so small in terms of the dilutive impact, and ultimately, again, ensuring he's on board and helping drive the business forwards is great news. Now, let's go on to the Smoke Cartel deal. Now, there are two core pillars to this, but basically it boils down to one overriding point. I've seen an increasing amount of chatter online that the stock's being manipulated by the Smoke Cartel management team to secure the best terms on the deal for them. Now, I just don't see how this can be the case. Let's touch on the deal first, and then I'll explain, with the benefit of my analysis, how this just makes very little sense. So we know that HITI is paying $8 million for Smoke Cartel. 2 million of that is in cash, and 6 million of that is paid in HITI shares. This is in US dollars, again for the avoidance of doubt. Now, converting this into Canadian dollars on the basis of the FX rate yesterday, this equates to around 7.4 million Canadian dollars in shares in HITI. On the basis of the share price yesterday, that means that they will be compensated with around 9.8 million shares in HITI. However, the important dynamic here to remember is that as the HITI stock price increases, the number of shares which the Smoke Cartel management team will receive decreases. This is ultimately the genesis of the argument that people are making that management of Smoke Cartel are deliberately manipulating the stock price of HITI shares down so they are rewarded with as many HITI shares as possible. However, the deal was announced on January 25th. On this day, the stock price for HITI was around 60 cents in Canadian dollars. At this stock price, this means they would have received around 12.5 million shares in HITI. What's more is that these deals take a while to negotiate. I'd hazard a guess at around a month, but probably a fair bit longer than this. If we look at the volume-weighted average price over the month period before the deal was announced, the Smoke Cartel management team would have been looking at receiving around 24.8 million shares in HITI. Based on where it is today versus that volume-weighted average price during the period of time which they would have been working on the deal, the Smoke Cartel management team now have 1/3 of the number of shares in HITI than they would have done without the recent increase in stock price since then. There's no manipulation going on here on this basis. It is about the long-term growth here, and the Smoke Cartel management team are very much aware of that. This is proven by the fact they're accepting the majority of their consideration in HITI stock. If they didn't believe in the long-term vision here, they would have insisted on a full cash payment. Now, the final piece around the transaction to consider is the relative valuation between the two companies and the fact that this is a hugely accretive deal for all shareholders. We know Smoke Cartel is generating revenues of $7.4 million and generates EBITDA margins of around 16%. That's a good margin to be generating as this type of business, but that equates to around $1.2 million before any synergies. Now, this $1.2 million of EBITDA is costing HITI $8 million, again USD for the avoidance of doubt. This is a multiple of around 6.8 times EBITDA. Or said differently, and in Canadian dollars, the company is acquiring around $1.5 million of EBITDA for just under 10 million Canadian dollars. Now, we know that HITI is currently valued at around 25 times EBITDA, meaning that when this incremental EBITDA gets added into HITI's overall consolidated EBITDA, this will become worth around $37 million. This means paying 10 million in Canadian dollars for an increase in your valuation of $37 million, again in Canadian dollars, is great. This is a clear example of multiple arbitrage, creating value from the difference between the valuation of HITI and the company that is acquired. Now, this is something which I do talk about a lot on this channel, and shout out to Martin for referencing this in our first Patreon video call, but the opportunity here for HITI is massive and it's great to see. And we will see plenty more of this within HITI as Raj continues to focus on the M&A strategy and driving more great accretive deals. Now, there is the fair argument that this could already be priced in. Now, that is hard to ascertain, but the overriding point is that this is a great deal and we as investors should want to see plenty more accretive M&A like this. It helps drive the growth incrementally within the business alongside the great organic growth which we're already seeing. Every time we get more news like this, it's great news for our long-term value creation. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, hit the subscribe button. Also, check out the Patreon group if you want to join the private Discord and the community we have over there. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's perspectives, opinions, so please get involved. Thank you so much for watching, and I'll see you in another video.